figure out from Sridhar Sivaram if he has any clues, Sridhar, on what's really happening. How do you make sense of what's going on in the market?
Only two people are smiling, Donald Trump and you.
That's because I go to the jungle. I can't understand what's happening here.
If this market continues, a lot of people will go to jungle.
Exactly. No, so, I think the starting point should be that if you have to think from US and Trump's standpoint, that where were they before all this started? So the average tariffs in the US was 2.5%. So many countries were having free lunch for multiple years. Just take an example of China. Their trade surplus with the US was about 400 billion. And if you add what they used to export through Mexico, say add another 200 billion, that's about $600 billion of trade surplus with the US. And what is US known for? Services. And the services exports are banned in China. So you can't even export. There's no Google, there's no Facebook.
Yeah.
So this was basically a one-sided, trade barriers that were created. Not just China. Look at what's happening in India. Look at our tariffs. When Mr. Uday Kotak says that, we are a very protected country. We haven't created a global brand in so many years because our entrepreneurs don't want to compete globally because our country is protecting them. So I think I can go on and on. The point is that this had to happen at some point. Look at the debt of US. It's about 36, 38 trillion. They're adding 2 trillion a year. It's unsustainable. We all know that something like this had to happen. And I think this is the first step. We will see calm in the next few weeks or months because as we speak, already 4-5 countries have offered zero tariff to the US. There are 50 other countries, if I go by what the Treasury Secretary spoke, there are 50 other countries that have offered to lower or make the tariff zero. What we could see is more trade in the future because if every country makes their tariff zero, we could see more tariff, excepting for China. I think China will be the big question mark because they've gone on to a retaliatory mode. Barring that, I think if most countries play their cards well, including India, and I'm surprised that India hasn't yet announced anything. Maybe the negotiations are going on the backside. Why should we have 100% tariffs on Harley Davidson? How many people can afford to buy it anyway? Who are we trying to protect? Or liquor for that matter? How does it matter? How much? What is the percentage of GDP that gets affected by all this? So I think if we play our cards well, I think the damage to the Indian economy should be less. I'm not saying that will not happen at all. There will be damage if there is trade barriers, but if we play our cards well, our damage could be less. I think this is a problem that is solvable, and I'm sure even from the US standpoint, this is a negotiating tactics, and eventually things will fall into place. That's my view, and that's how I'm looking forward. I think what US is doing is not wrong, is what I'm trying to say. I know a lot of people are saying this is self-goal. I don't think it's self-goal.
It works for them.
It does. They don't have a choice.
Sridhar, I have a simpler point,
yes, of
which
course.
is, just to take that point forward, everybody knew tariffs were coming. Donald Trump had made that part of his election promise. When Donald Trump came, American markets, they rallied. Dollar showed strength. It's only when tariffs, seriously, when he came, American markets went into, oh my God, this is the best thing that's happened to America. And it is only when tariffs have been rolled out, because everybody knew the markets are reacting. वो पहले क्या था, ये क्या है?
So I think there was also a belief that Donald Trump speaks a lot, but he implements less.
Okay.
So there was a belief, and even within our own community, if you see, a lot of pundits would have come and spoken that, he will say and he'll roll back. He'll say and he'll roll, which also happened a few times. But I think this time they were serious, because you have to remember that they've been pushed to the wall. They're at the edge. You can't have an economy which has 150% debt to GDP and adding 2 trillion every year. So I think the numbers were so absurd that they've inherited a very poor balance sheet, that something like this had to happen. So I can question whether the percentage of tariffs and the way they calculated tariffs, that was so absurd. I think that has created more panic. Maybe that could have been slightly better. But the fact that there has to be a fair play globally with US, I think that was a given. I'm not surprised that US is pushing for it. In fact, at some extent, I think what they're doing is right.
Okay, fair point. And I also know there are many countries which are extremely dependent on US, like a Vietnam, etc., are saying that we're going to, completely give up on the tariffs and let's try and negotiate on the table. But how do you think this entire battle between the two giants, US and China, is going to play out? And what is that going to mean for the world?
So I think that may not play out that well. So just look at it. I know a lot of people think that if there is an incremental 30% tariff, the entire 30% goes to the consumer. That's not right, because look at the maths. If any consumer goods lands into a port, when it reaches a store, it is 3 to 4 times of that.
Yeah.
Okay, so if it's $5, you multiply it by 4. Same for the tariff. So the tariff is say 24 or 25%. You divide that by 4. So roughly about 6% odd is the impact on the consumer. To a large extent, will be borne by the consumer and the retailer, and to a smaller extent by the producer. So the net impact is not that high. I mean, they were anyway getting 2-3% inflation in their product. So there will be some increase, but it's not as dramatic as people make out to be when you get into the nitty-gritties of it.
Yeah.
So you have to keep that in mind, that these looks quite absurd, but at the end of it, these are manageable risks. So prices will go up. I think, as I said, services exports are banned in China. Will China agree to relook at that? I'm not sure. So why should
I think
US
they're too
give
far
up?
into the game.
So that is
now
exactly,
roll
Aisha,
back
that
on
exactly
that.
is the problem.
Yeah.
That we've had a one-sided trade agreements across the globe, and US has been bearing all the brunt. At some point, they had to wake up, and this is the point. Anyway, they're pushed to the corner. So I think this is, which is why I said that in most countries the risks are manageable. With China, I think it's a bit different, and now they've gone into a retaliatory mode, which worsens the situation. I'm not sure how that plays out, so I'll be very worried if I'm a Chinese investor. But barring that, I think most other countries, it is a manageable risk. I mean, we can reduce our tariffs. I mean, from India's standpoint, I mean, I'm looking at it selfishly. We can reduce most of our tariffs.
But
I mean, what are we trying to do?
their fight doesn't have any collateral damage for the world, right? Is what I'm trying to ask.
The China-US?
Yeah.
No, it does have, because China is the manufacturing hub for the world. So if they have surplus capacity, what do? They will then try to dump it into other countries. So you will get, so Vietnam again is a question mark, right? Everybody knows, is Vietnam really manufacturing all this? Which is why, even though Vietnam has offered to make it zero, US hasn't immediately agreed, because they want to ensure that this is not China coming through Vietnam. So I think it's not as easy. I mean, we sitting here can say whatever we want. When somebody is running a country as large as US, there are a lot of issues that has to be handled. And as the Treasury Secretary recently said, that 10% of the US, 10% of the people in the US hold 90% of the wealth. Yeah. So I mean, these are staggering numbers. So it's been a one-sided capitalist, economy that has been going through, and maybe a lot of people have been left behind. So I'm not trying to support Trump or to support anybody else. I'm just saying they're pushed to the corner. Something like this had to happen today or tomorrow. It's happened today. If we are smart in India, we can solve this problem very easily. Will there be collateral damage? Yes, there will be. If global trade takes a hit, we will have collateral damage. That can be handled, because maybe we take a hit on the GDP, the government has to come up, Reserve Bank has to come up with some measures. We've seen issues like this in 2008, 2020. These are issues that can be handled. I don't know about China. Okay, that's a big question mark. I think they have a problem.
But Sridhar, amidst this global sell-off where we are seeing not just the equity markets but even the base metals and even gold, I want to have your take on the gold since you have been a supporter. But amidst this sell-off, Sridhar, where will investors find a place to hide? What's your take?
So, which is why I always say that asset allocation is very important. You can't have all your eggs in only equity. So you need to have debt, you need to have gold. You diversify your asset allocation in a manner that when equity takes a hit, there are other asset classes which will be more stable. And question on base metal and gold, let's accept it. Gold is up almost 50% in the last 1 year, despite the correction that we are seeing. You can't have an asset class keep going up, one way. I'm a big bull on gold, but I'm saying that it's gone up too fast, too soon. So there will be some correction, but over a period of time, I'm still bullish on gold. That this is an asset class which will do well, but it can't go up 50% every year. I mean, this is not possible. So that's how I look at it. Metals will take a hit. If there's a risk off, then metals will take a hit, which eventually is good for India. India is an importer of metals, oil, but when you have a risk off, there's no hiding place.
See, Asha, historically, I've seen, and Sridhar, you know markets much more than anybody does, that when you see this kind of in panic, no, that's the beginning of the end of the correction. I mean, the collateral damage which has happened is so high, Sridhar, that sabki band bach gayi hai, right? That's the typical time you would say that prices, they start becoming attractive. News may not become, clear, but prices will start becoming attractive.
So
are we nearing that stage?
I think in the large cap, surely. In the small and mid cap, you can still question whether you want to pay 30, 40 times for companies whose growth prospects are now being questioned. I think it is becoming a very stock specific. If you ask me which sector looks great today, I don't have an answer because, within sectors, stocks are trading at
You can tell us stocks, it's okay.
Huh?
Then might as well talk stocks.
We'll talk outside. So, I mean, that's the issue that, there are opportunities in the market. And, we've been a bit cautious on the market for a while. And one of the reasons was this. We wanted to wait and see how this whole Trump tariff plays out. Our own internal view was it will happen. This is not the one where, he says and it will not happen. Our view was that the tariffs will come. And as you can see from my tone, that we did think that what they're doing is not wrong. Maybe the way they've done is wrong, but I don't think what they're doing because it was very one-sided. So we were expecting some of this. Does it mean that our portfolios don't get hurt? It does get hurt, right? I mean, even if I'm 15% cash, 85% is still, invested in the market. It does hurt. But that's how the markets are, right? There's no one way. We've had 7-8 years of very good markets. People just start believing that every year equity markets give you positive returns. That's not the case. You will have years when equities will not give returns. That's the time when you build your portfolio for the next bull run. So that's how I would put it, that this is the time to look at your portfolios, move out of mistakes, and build your portfolio for the
So let's look at some turning points, right? Some turning points are, after COVID, if you bought the whole shield of Atmanirbhar Bharat, you actually got the stocks and the sectors right. Similarly, when the China Plus One started, if you bought into chemical stocks, you got it right. I mean, the house of Enam bought a lot of EMS stocks because they were able to understand that electronic manufacturing is moving into India. This is a turn where some companies would benefit, some companies would lose, and some companies, because of the China factor, would benefit disproportionately. What are some of those companies or businesses where, assuming that China and US are at a war, India somewhere comes in the middle? Ultimately, it's all about identifying the next big theme. Buy cement instead of steel, buy domestic instead of global, avoid IT but buy pharma. How should one reorient their portfolio?
So I think, Nikunj, in a month's time, a lot of it will be clear because we don't know how the negotiations with various countries are playing out. What if there is a truce with China and US? Things will turn dramatically, right? So I'm just saying that it's not easy for somebody to sit today and say, these are the sectors that look great. From stock specific, it's easy for me. If I look at something is trading at deep value or something where it has corrected more than the earnings that we would have as an estimate, then we would look at it. As I said, large cap, maybe financials, large cap look good because they haven't really participated much, and expectations from the market are also very less. Domestic, lot of consumption plays.
Real estate, I mean, nothing changes there. Export ही नहीं होता है कुछ.
No, but real estate, there's a question of wealth effect, right? So it's not that easy. I mean, you can say real estate, but when the wealth effect goes down, people don't want to pay 30, 40, 50 crores for a real estate. So I have to then look at, the affordable housing. There aren't many plays on affordable housing. So it's not as easy, it's when you drill down and see, okay, I want to buy these stocks, then you start looking at all the nuances. So as I said, as we speak right now, We are not venturing into newer ideas. We are just looking at our own portfolio and seeing where are we seeing where the damage has been substantially higher. Rather than trying to build a new idea, we are trying to reinforce our views on the existing portfolio that we have. And we know that the next 2-3 weeks or maybe a month will be a lot of flux, a lot of information will come. We'll try and digest all that. But that's how it is, right? We saw during COVID, we didn't have a clue. We've never seen, I mean, we've been investing for so many years, nobody had a clue. Yeah. We evolved from there. I mean, 2008, 2013, we've seen a lot of these cycles. So I think markets will evolve. I think this is a period of flux, but I think the calm will come. I mean, my view is that US, people will understand that US is serious this time, and there has to be a fair trade with US. That's how I'll put it.
Sure. But as an investor, Sridhar, you know, looking at the screen, I know that it's not going to be an uphill move as we saw from 2020 lows, yes. Right? Those last 5 years have been a dream run. Yeah. Next 5 may not be like that. Yes. Looking at this global fall and looking what India has already sort of stomached from October up until Feb, March of, okay, was a relief. But I also know that there is more pain to go. So as an investor, what do you do now? Do you go in complete capital protection mode if you didn't completely book out up until Feb?
So, you know, I started investing in 94. 94 to 99, the market gave no returns. We're talking of 5 years. We had a tech boom bust for 1 year where only the tech stocks did well. The rest, economy did nothing. Those stayed there only. Reliance and the L&Ts of the world didn't move. We had a crash until 2003, there were no returns. So effectively from 94 to 2003, our markets gave no returns. I'm just saying, I come from a background where my baptism was on a bear market.
You hadn't tasted blood then, right? You didn't know that the markets could do what they can in
But
months,
I know what it can do, right? In hindsight,
exactly.
I lived through that. So I'm just saying that, you know, we got used to markets giving returns every year. I'm not saying that we are entering a bear market or we're going to hear 10 years because these days cycles have shortened. So if there is an impact, the impact happens much faster than what used to happen. The cycles are much shorter. You get volatile moves.
Thank God.
And people digest it and move
from
on.
93
yeah.
to 2000.
But it can happen that you see a flat market or a mildly negative market or a slightly more negative market in 25. Maybe we digest everything in 25. Look, our earnings have also been weak. Finally, the markets and the stocks are slaves of the earnings. If the earnings don't follow through, we have an issue. So our earnings were weak in FY24. Our earnings could get downgraded, will get downgraded in FY26. I think the current consensus is about 15%. I think we'll get possibly 8-9%. So you're
15 ka 8-9. FY26.
Yeah.
Wow.
Of course, I mean, with all this that is happening, nobody has adjusted for the fact that the actual number for FY25 itself will be lower. So once you adjust that lower, your number will look that much more higher, right? So you just adjust for the reality of today, that will come down. Maybe it improves in third and fourth quarter as, you know, our consumption is also weak right now. So I think a lot of this will play through in 25, which is what I said, that this is a year where you look at your portfolio, move out of mistakes, and build a portfolio for the next few years, and you will get more clarity in the next 1 month or so as to what could emerge as a winner. So at this time, you're better off hiding in stocks where you know earnings are strong, despite all the turmoil that you have. So that's how I'll put it. It's very difficult to give clear vision at this time because there are times when it's hazy and you don't have clear vision. So you just tread slow at that time, and that's the point in the market where you just go very slow. Don't be in a hurry. That's it. That's all I can say.
Okay.
I'm glad you were not in a hurry to go today. We've spent 30 minutes on the show.
We could go on actually, but yeah.
Dinshaw is in a hurry. The director is telling me to go to Dinshaw because his distributors are calling him already. Arey bhaiya, TV show baad mein, pehle batao NAV ka kya karna hai.
If you like this video, then like, share and subscribe to ET Now.